Now we are moving towards subsequent measurement. Subsequent measurement means how to record the asset, what will be the change in the value of an asset after the year of purchase. So for example, today if we have purchased an asset for say 1 lakh pounds, and obviously at the end of the year we have used this asset for 1 year, so what to do now? So there are two methods for the subsequent measurement. Subsequent measurement means measurement of an asset, valuation of an asset after the year of purchase. So there are two methods for the subsequent measurement. One method is called cost method. Cost method states that property, plant and equipment should be recorded at carrying value. As per cost model, we will record the asset at carrying value. Initially, we will record the asset at cost, and after that, we will calculate the carrying value of the asset at every year, at the end of every year. So how to calculate the carrying value? Students, we will record cost, we will deduct accumulated depreciation, and we will deduct accumulated impairment loss. So what is impairment loss? Sudden decrease in value of an asset. So we will cover this point. There is a separate standard on impairment losses, and we will cover this point later on in our syllabus. So for the time being, asset will be recorded at carrying value, and how to calculate the carrying value? Cost minus accumulated depreciation. So before we move towards calculation perspective, let's discuss what is depreciation. So what is depreciation? Reduction in value of an asset with its usage. Obviously, if we have purchased, suppose if we have purchased a laptop, and we are using this laptop, and obviously with the passage of time the value of the laptop will reduce with its usage. So what is depreciation? Reduction in value of an asset with its usage. Whenever you will use an asset, obviously its value will be reduced. Reduction in value of an asset with its usage is called depreciation. So what is depreciation? Decrease in value of an asset due to its usage, or maybe wear and tear, or maybe obsolescence. Maybe and the technology used within the asset has outdated, or there are some legal restrictions. So, but the most common type is usage. Whenever we will use an asset, it is obvious that the value of that asset will be reduced. So reduction in value of an asset with its usage is called depreciation. There is another definition as well. Systematic allocation of depreciable amount of an asset over its useful life. So, for example, suppose we have purchased an asset and its cost is £20,000. Suppose we have purchased an asset and its cost is £20,000 and its useful life is say 5 years. So it means we will use this asset for 5 years, and what would be the depreciation? 20,000 pounds divided by 5. So per year depreciation is 4,000 pounds. So it means 20,000 pounds will be consumed in 5 years. Total cost is 20,000 and total life of the asset is 5 years. So it means we will consume 4,000 pounds every year. So this is systematic systematic allocation of depreciable amount of an asset over its useful life. Splitting the value of an asset over the useful life is called depreciation. So we will split this 20,000 pounds over the life of the asset. Every year we are going to reduce the value of an asset by 4,000 pounds because every year we are going to consume the asset by 4,000 pounds. So splitting the cost of the asset over the life of the asset is called depreciation. There is a term called depreciable amount. So what is depreciable amount? Cost minus residual value is called depreciable amount. Cost minus residual value. So we will always charge depreciation on depreciable amount. Whenever you will calculate depreciation, it would be cost minus residual value divided by useful life. Say for example, if we have scrap value over here or residual value over here, scrap or residual value. Suppose we have residual value of 1,000 pounds. So now, how to calculate depreciation? Students, you need to deduct the scrap value over here, which is 1,000 pounds. So now, in this way, you will be able to calculate 20,000 pounds minus 1,000 pounds divided by useful life. So now, the depreciation is 3,800. So we will always calculate depreciation on cost minus residual value or scrap value divided by useful life. Accumulated depreciation. Depreciation of all years is called accumulated depreciation. Total depreciation of all years is called accumulated depreciation. Residual value. Residual value is the scrap value at the end of the useful life of an asset. So residual value is the estimated amount that entity can obtain when disposing of an asset after the end of the useful life. So this is basically scrap value. When the useful life of an asset will end in the future, when the useful life of an asset will end in the future, what would be the value in the form of scrap? So that is called residual value. Okay, so depreciation methods, there are different depreciation methods and three methods are very common. You have covered these methods in your earlier studies. First of all, straight line basis method. We have just covered an example of depreciation by using straight line basis method. What is depreciation? Cost minus scrap value divided by useful life. So this is the formula, this is the method for the calculation of depreciation with the help of straight line basis method. We have just solved an example. Cost of an asset is £20,000, useful life is 5 years, and scrap value is £1,000. So how to calculate the depreciation? Cost minus scrap value divided by useful life. So every year in the straight line basis method, the amount of the depreciation will remain same for every year. Second method is reducing balance method. In this method, we will charge depreciation on carrying value. So this is a typing mistake. This is typing mistake. So this is not carrying value, this is cost. Cost minus accumulated depreciation, and answer of this equation will be carrying value. So cost minus accumulated depreciation into percentage. For example, we have purchased an asset and cost of that asset is £30,000. And useful life is, say, 5 years. Depreciation percentage 20%. So the depreciation percentage is 20%. Okay. So now, how to calculate the depreciation? How to calculate depreciation by using reducing balance method. Depreciation by reducing balance method. So let's solve this example as well. How to calculate depreciation with the help of reducing balance method. So depreciation in the year number 1. Depreciation in year number 1. So So what is the cost of this asset? So we have purchased this asset for £30,000. This is the cost of this asset. And in reducing balance method, we will charge depreciation on carrying value. So now, depreciation in the year number 1. Cost of this asset is £30,000 minus accumulated depreciation. Until now, we have not charged any depreciation. So, cost minus accumulated depreciation multiplied by 20%, which is the rate of depreciation. So when we will take 20%, Answer is 6,000. So when we will deduct the depreciation from the cost, so we have carrying value. So the carrying value of this asset, this is carrying value. So carrying value of this asset is 24,000 pounds. And in the year number 2, we will charge depreciation. In the year number 2, we will charge depreciation of 20%, but we will charge depreciation on carrying value equal to this one multiplied by this one. So this would be the depreciation for year number 2. So in reducing balance method, we will always calculate depreciation on carrying value. Once again, this is carrying value. This is carrying value at the end of year number 2. This is carrying value at the end of year number 1. And this is carrying value at the end of year number 2. And in the same way, things will go on. When year number 3 will come, we will charge depreciation on carrying value, and once again, it would be 20%. What is opening carrying value? 19,200, and we will charge depreciation on opening carrying value, and this will be your closing carrying value. Students, if you have any confusion, you can ask. All these points, students, you have covered all these points in your earlier studies. If you have any issue or any confusion, you can ask. So this is the method for calculating depreciation, and it is called reducing balance method. And there is another method which is rarely used, machine hours basis. So in this method, we will charge depreciation as per the number of machine hours used. So we will take cost minus scrap value divided by the number of hours used in the current year divided by total life in machine hours. For example, if the total life of the machine is 200 hours, we can maximum consume this machine for 200 hours, and we have used this machine in the current year for say 40 hours. So cost minus scrap value into, in the current year we have used this machine for 40 hours, and divided by 200, we can use this machine for 200 hours in total. So this is another method for the calculation of depreciation, but this method is rarely used. Okay, so now the next point is accounting estimates and change in accounting estimates. So there are few estimates which we are using whenever we are valuing different assets. For example, first of all, depreciation method. So depreciation method is just an estimate. You can see in this example, whenever you will use straight line basis method, you have same depreciation every year. So if you are expecting that the asset has same depreciation every year, obviously you will use straight line basis method. But if you are expecting that the depreciation will change every year, in the starting years depreciation will be higher, and in the next year depreciation will be lower. So in that case, you can see over here, in the first year depreciation is 6,000, in the second year it is 4,800, in the third year it is 3,840. So if you are expecting that in the starting years depreciation will be higher and in the next years depreciation will be lower, in that case you can use reducing balance method. So it's just your estimate. You will estimate whether you should use straight line basis or you should use reducing balance method. Once again, useful life. Useful life is another estimate. Either you are going to use this asset for 5 years, either you are going to use this asset for 10 years. So this is just your estimate. Another value, scrap value. What would be the scrap value at the end of useful life? Suppose useful life of an asset is 5 years. So what would be the scrap value after 5 years? We just don't know exactly. So we are just estimating that we will sell this asset in scrap after 5 years. And this would be the value. So scrap value is just our estimate that what would be the scrap value after 5 years or 10 years. So these are all estimates. And as you all know, there may be a change in the estimate as well. Estimates can be right or wrong. So if the estimate we have made in the previous year was wrong, then we should change our estimates. So for example, first change in estimate, straight line to reducing balance method. Straight line to reducing balance method. For example, we have purchased an asset for £40,000. Its useful life is 10 years. And after 2 years, depreciation method changed from straight line to reducing balance method. So this is a small example. And the depreciation percentage in the reducing balance method will be, say, 15%. So this is a small example. Now let's solve this example. There is change in estimate in this example. So students, what is cost of this asset? Cost of this asset is £40,000. Or we should make columns: cost, accumulated depreciation, and carrying value. Yes, that's better. Okay, so cost of this asset is £40,000. Now we will charge depreciation in the year number 1. So in the year number 1, we can see useful life is we can see useful life is 10 years. So when we will charge depreciation for the year number 1, when we will charge depreciation for the year number 1, so we will calculate depreciation, say 40,000, bracket start, 40,000 minus scrap value, which is 0, and divided by useful life, which is 10 years. So in this way, we will be able to calculate depreciation. So we have depreciation of 4,000 pounds. And what is carrying value? 40,000 pounds minus 4,000 pounds. Or we can take a total over here as well. So the total cost is 40,000. Total accumulated depreciation is 4,000. And carrying value this minus this. So the carrying value at the end of the year number 1 is 36,000. Now let's move towards year number 2. And in the straight line basis method, we will calculate depreciation. We will calculate depreciation in the same way every year. So as you all know, in the straight line basis method of depreciation, cost minus scrap value divided by useful life. So depreciation will remain same for every year. So once again, total cost still remains same, 40,000, and accumulated depreciation is now 8,000, and carrying value is 32,000. Now, there is change in estimate over here. There is change in estimate over here in the year number 3. After 2 years, we have shifted from straight line basis method to reducing balance method. So no issue at all. So students, please remember, whenever there will be change in estimate, we will replace everything with the carrying value. So we will always use every value as a revised value. For example, instead of cost, we will use carrying value. Instead of total useful life, we will use remaining useful life. So whenever there will be change in estimate, we will use all the values as a revised values or remaining values. For example, in the year number 3, in the year number 1, we were using straight line basis method of depreciation. Straight line basis method of depreciation in the year number 1. In the year number 2, once again we were using straight line basis method of depreciation. But in the year number 3, we are using reducing balance method of depreciation. And now over here there is change in estimate. Whenever there will be change in estimate, students, please remember, we will charge depreciation on remaining values. What do you mean by remaining values? Students, instead of cost, we will use carrying value. Even though we can read the formula from the notes as well. So instead of cost, we will use carrying value. We will deduct accumulated depreciation after change in estimate. We will not deduct total accumulated depreciation. We will deduct depreciation after change in estimate from 3rd year onward into depreciation percentage. So let's see, 32,000 pound is the carrying value. You can see over here, 32,000 pound is the carrying value. So how to calculate depreciation? Carrying value minus accumulated depreciation after change in estimate. So students, we will apply a cutoff over here. We will apply a cutoff over here, and we will start charging depreciation in a different way. So instead of cost, we will use carrying value minus accumulated depreciation after change in estimate. So we have not charged any depreciation until now after change in estimate, into depreciation percentage. And what is the depreciation percentage? It is 15%. So equal to 32,000 pounds and multiplied by 15%. So now depreciation is 4,800. Cost will remain same. So cost will remain same. So now what is the carrying value? Cost minus accumulated depreciation. What would happen in next year, year number 4? Students, what was the carrying value at the time of change in estimate? So when the estimate was changed, at that time carrying value was 32,000 pounds. So we will use 32,000 pounds instead of cost. And depreciation after change in estimate, you can see over here we have charged depreciation of 4,800 pounds after change in estimate. Please remember, over here our estimate has changed. This is the change in estimate. Over here our estimate has changed, and we have charged depreciation of 4,800 pounds after change in estimate, equal to carrying value so in the next year depreciation is 4080. So 32,000 minus 4,800 into 15%. So the depreciation is 4080, and what would be the carrying value? This minus this. Same goes for year number 5. In the year number 5, once again things will remain same, but what is the total depreciation we have charged after change in estimate? You can see after the change in estimate, we have charged total depreciation of, after adding both these values, after change in estimate, we have charged total depreciation of 88,880. You can see over here at the bottom of this page there is given sum. Whenever you will select two cells, sum will be mentioned at the bottom of this Excel screen, 8880. So this is change in estimate. Whenever, please remember, whenever there will be change in estimate, whenever there will be change in estimate, whenever there will be change in estimate, we will always charge depreciation. We will always charge depreciation on the basis of remaining value or carrying value. So students, if you have any question, you can ask. In the same way, we can shift from reducing balance method to straight line basis method. So once again, if we are going to shift from reducing balance method to straight line basis method, we will use carrying value instead of cost in order to charge depreciation. Change in useful life. There may be change in useful life. So once again, things will remain same. So for example, we have purchased an asset and its cost is say 30,000 pounds, and its useful life is say 10 years. After 2 years, there is change in estimate. So after 2 years, logically, if total life is 10 years, after 2 years, its remaining life should be 8 years. But after 2 years, it was estimated that remaining life will be 5 years. Logically, it should be 8 years, but we have re-estimated, and we think that the remaining life will be 5 years instead of 8 years. So, in the year number 1, what would be the depreciation? In the year number 1, what is total cost? 30,000 divided by 10. And once again, in the year number 2, cost divided by useful life. In the next year, once again, depreciation is 3,000 pounds. Now, there is change in estimate. After 2 years, there is change in estimate. So whenever there will be change in estimate, first of all, we need to calculate the carrying value. So what is the carrying value? So what was the total cost of this asset? Total cost of this asset was 30,000 pounds minus accumulated depreciation. We have charged depreciation of 3,000 pounds in the 1 year and 3,000 pounds in the next year. The total depreciation is 6,000 pounds, and answer is 24,000 pounds. This is the carrying value. Now we are going to change the estimate. First of all, we have calculated the carrying value at the time of change in estimate. So we are going to change the estimate at the start of year number 3. So at the start of the year number 3, carrying value is 24,000 pounds. Now we will charge depreciation for the year 3. We will charge depreciation for year number 3 as per revised method. So what are the revised values? Instead of cost, we will use carrying value, which is 24,000 pounds, minus scrap value, which is 0, divided by revised useful life. What is revised useful life? 5 years. In the same way, carrying value at the time of change in estimate. So when the estimate has changed, what was the carrying value? 24,000 pounds, equal to this one, divided by remaining useful life, which is 5 years. So now we are going to charge the depreciation as per revised estimate. What is revised useful life? 5 years. And what is the carrying value at the time of change in estimate? 24,000. In the same way, if there is change in residual value, students, if there is change in residual value, once again we will use carrying value at the time of change in estimate instead of original cost. So whenever, please remember, it is just a common sense point, whenever there will be change in estimate, you will use carrying value instead of original cost, and you will use all the revised values. So we are reading subsequent measurement. So students, there are two methods of subsequent measurement. One is cost model. In the cost model, we will record the asset at carrying value in the subsequent years. How to calculate the carrying value? Cost minus accumulated depreciation. So this is cost model. And the second method for the subsequent measurement is revaluation model. Second method for the subsequent measurement is revaluation model. So, as the name explains by itself, revaluation means we will recalculate the market value of an asset every year. So, we will calculate the asset, we will record the asset at revised value, recalculated value every year. So property, plant and equipment should be recorded at revalued amount. Means asset should be recorded at current market value instead of carrying value. So in this method, we will record the asset at market value. We will not record the asset at carrying value. So we will take current market value less accumulated depreciation less subsequent accumulated impairment losses. So obviously we have not covered this point yet. There is a complete standard. There is a complete standard on this point, impairment losses. So we will cover this point in detail when we will cover impairment losses. But for the time being, in the revaluation model, we will record the asset at market value minus accumulated depreciation. So it's a bit tricky, so let's cover it with the help of an example. For example, we have purchased an asset on 1st of Jan 2015. So we have purchased an asset on 1st Jan 2015, and the cost of this asset is say 1 lakh. And its useful life is say 20 years. On first revalued amount on 1st of Jan 2017. So we have purchased this asset in 2015. So 15 and 16, after 2 years, We have recalculated the value of this asset, and we are thinking that the market value of this asset would be £90,000. Mhm. 95,000 pounds. So this is a small example. This is a small example. What should we do? In this example, you can see the asset has revalued. So let's solve this example and let's discuss how to tackle these type of examples. So we will prepare few columns. First column is for the cost. Second column is for accumulated depreciation. Third column is for the carrying value. Fourth column is revaluation gain. And the fifth column is for the retained earnings. Retained earnings means actual profit. So these are few columns. So we will solve the example of revaluation with the help of these columns. So first of all, cost. On 1st of Jan 2015, we have purchased this asset for 1 lakh. This is the first transaction. And after that, depreciation. Obviously, we need to charge the depreciation for 2015. So, how to charge depreciation for the year 2015? Or you can say 31st December 2015. So, at 31st December 2015, 1 year has completed. Because 1 year has completed, we need to charge depreciation. So total cost is 1 lakh divided by total life is 20 years. So now equal to this one plus this one. And what is the carrying value at the end of year number 1? What is total cost? 1 lakh. What is depreciation? 5,000. So at the end of year number 1, carrying value is 95,000. There is no revaluation in the year number 1. Now, once again, depreciation 31st of December 2016. Once again, because you can see useful life is given, so we are charging depreciation as per straight line basis method. So in the straight line basis method, what is cost? 1 lakh divided by useful life. What is useful life? 20 years. So once again, in the year number 2, depreciation is once again 5,000 pounds. So at the end of year number 2, cost is same, 1 lakh. Accumulated depreciation is 10,000 pounds and carrying value is 90,000 pounds. So you can see there is increase in value of an asset by £5,000. So this is called revaluation gain. So what would be the double entry? Students, debit. The very first entry would be revaluation gain. Whenever there will be increase in income, obviously, as you all know, whenever there will be increase in income, we will pass credit entry. So increase in income will always be credit. So there is an increase in income by £5,000. Okay. What would be the remaining entries? We will cancel accumulated depreciation. What is accumulated depreciation of this asset? £10,000. So accumulated depreciation will be recorded as a debit entry, and the balancing amount will be recorded in the cost. Debit would be accumulated depreciation, credit would be revaluation gain, and what is the balancing amount? Or wait, let me make it easy for you guys. Debit, and this is credit. So revaluation gain is credit. Debit would be accumulated depreciation, credit would be revaluation gain, and cost of the asset will be the balancing amount. Balancing figure. So this would be the double entry at the time of revaluation. So you can see debit side is 10,000, credit side is 5,000. So the cost of the asset will be placed over here, credit. So let's record these double entries in this table. First of all, accumulated depreciation is debit. So it means whenever accumulated depreciation will be debited, means there will be negative accumulated depreciation. So accumulated depreciation has reduced by £10,000. Revaluation gain. So there is revaluation gain of £5,000. And third one is cost of the asset. That is credit means cost has reduced by £5,000. So this is the double entry at the time of revaluation. Students, if you have any confusion, you can ask. Are you able to understand this double entry? Please tell me right now. Are you able to understand this double entry? Yes or no? Everyone? This is double entry for revaluation. Whenever there will be revaluation gain, debit would be accumulated depreciation, credit would be revaluation gain, and credit would be cost of the asset. This would be balancing amount. You can look either it should be on debit side or credit side. So after revaluation, we will charge depreciation on remaining useful life. So what is revalued amount? 95,000 divided by remaining life. Total life has 20 years, 2 years has passed, so the remaining life is 18 years. Yes. So the depreciation is 5278. Okay, so let's read these points from the notes as well, so you will be able to follow these points step by step. What is step number 1? Restate the asset from cost to revalued amount. Means step number 1 is we need to calculate revaluation gain. So first of all, this is first step number 1. First of all, we will calculate revaluation gain, and then we will remove existing depreciation. So you can see over here, as well, revaluation gain, you can see. So first of all, we have calculated revaluation gain or loss. We can write down over here. So the step number 1 is we need to calculate revaluation gain or loss. So we have calculated revaluation gain or loss. It is £5,000. After that, first step is we need to cancel existing accumulated depreciation. We have cancelled it with debit entry. Then we need to record revaluation gain, and the balancing amount will be recorded in the cost. Okay, so this is the first step. What is the combined double entry for step number 1 and 2? Debit non-current asset, debit accumulated depreciation, and credit revaluation surplus or revaluation gain. The example which we have just discussed, in this case you can see balancing figure is on credit side, but maybe balancing figure is on debit side as well. Then calculate depreciation on revalued amount over the remaining useful life. So we have just calculated. So what is the revalued amount? £95,000 divided by remaining life 18 years. So the depreciation is now 5278. Okay. So next step is very important step. Transfer the excessive depreciation per annum. So students, please be careful. What was the per annum depreciation previously? You can see in 2015 depreciation was £5,000. In 2016 depreciation was once again £5,000, and now it is 5278. So previously per annum depreciation was 5,000, and now per annum depreciation is 278. So it means there is an extra depreciation due to revaluation. It is called excessive depreciation due to revaluation. Excessive depreciation after revaluation. So after the revaluation, there is excessive depreciation as compared to the depreciation before the revaluation. So it is 5278 minus previous before revaluation depreciation was 5,000. So it means now there will be extra depreciation of 278 pounds every year. So the double entry for the excessive depreciation. Excessive depreciation. So the double entry for the excessive depreciation would be, this is debit side and this is credit side. So excessive depreciation will be shifted from revaluation gain to retained earnings. Revaluation gain to retained earnings. So what is excessive depreciation? 278 pounds. Debit would be revaluation gain and credit would be retained earnings. So this would be the double entry for excessive depreciation. So this entry would be passed every year. This is the entry for every year. So we will deduct 278 pounds from revaluation gain or revaluation surplus, and we will place these 278 pounds in the retained earnings. That's it. So let's repeat this activity for one more year. So same goes for 2018. In 2018, we will charge depreciation in the same way. What is revalued amount? 95,000. What was the remaining value at date of revaluation? Please remember, please don't take remaining life at every year. It will remain 18 for all years. So what is revalued amount? 95,000 divided by remaining life at the time of revaluation. So what was the remaining life of the asset at the time of the revaluation? It was 18 years. So the depreciation is 5278. And what is excessive depreciation? Same entry. What is depreciation now? 5278. Before revaluation it was 5,000, so there is excessive depreciation. Same entry over here. So now cost is 95,000, accumulated depreciation is 10,556. This is carrying value, and this is remaining revaluation gain, and this is retained earning. So you can see over here, revaluation gain was 5,000, then reduced to 4,722, and now reduced to 4,444. So every year revaluation gain will be reduced, and your retain and it will be shifted to retained earnings every year. So let's take a similar example. In which the value of the asset has, let's take another similar example in which the value of the asset has increased. Okay, so suppose we have purchased an asset on 1st Jan 2010, or maybe 11. So we have purchased an asset on 1st Jan 2011, and its useful life is 10 years. And on 1st Jan 2013, on 1st Jan 2013, the asset has revalued, and its revalued amount is, say, 92,000. So this is a small example. Once again, we have purchased an asset on 1st Jan 2011 for 1 lakh pounds. Its useful life is 10 years. And on 1st Jan 2013, so means a complete year of 2011 has passed, a complete year of 2012 has passed. So now its remaining value is 92,000 pounds. So starting with the cost, what is cost of this asset? 1 lakh. And in 2011, we have charged depreciation. So total life is 10 years. Total life is 10 years. So what would be the depreciation? Equal to cost divided by 10. So the depreciation is 10,000 pounds. So total cost is 1 lakh, depreciation is 10,000, and carrying value is 90,000 pounds. Let's move towards 2012. Once again, in 2012, cost divided by useful life. Once again, depreciation is 10,000. and carrying value is 80,000. At this date, we are going to revalue the asset. On 1st Jan 2013, after 2 years, now we are going to revalue the asset. At this date, its carrying value is 80,000, while revalued amount is 92,000. So first of all, we will calculate revaluation gain or loss. So revaluation gain, revalued amount is 92,000, carrying value is 80,000. So the revalued amount is 12,000. Yes. So there is revaluation gain. So means 12,000 pounds would be credit entry. And what was total depreciation till date? So until now we have charged a total depreciation of 20,000 pounds. So this would be the debit entry. So these two are the fixed entries: revaluation gain credit and accumulated depreciation debit. And balancing amount will be recorded in the cost of the asset. So you can see credit side, wait, let me change it. It is 102. In this way, we will be able to explain another point. So revalued amount is 102 instead of 92. And your revaluation gain is 22,000 pounds. So this is the example. So revaluation gain is 22,000 pounds. So revaluation gain will be credit. Accumulated depreciation, total depreciation is 20,000 pounds. You can see over here, total depreciation is 20,000 pounds. It would be a debit entry, and the balancing amount will be recorded in the cost of the asset. So in this example, you can see there is a cost on the debit side. In order to equal the equation, we need to record the entry on debit side. So cost of this asset will be debited. So let's pass this double entry. Accumulated depreciation is credit. Means we need to cancel the accumulated depreciation. Here we go. So accumulated depreciation is debit. Cost of the asset is debit as well. And revaluation gain is credit. And the revaluation gain on this asset is 22,000. So this is revaluation gain. Students, if you have any question, you can ask. And now we need to charge depreciation as at 31st of December 2013. What is the revalued amount? Students, you can see the revalued amount is 102,000 divided by remaining life. Total life was 10 years, and we are revaluing this asset after 2 years. So at the date of revaluation, remaining life is 8 years. So what is excessive depreciation? Students, over here, now we will charge depreciation 102,000 divided by 8. So this is the depreciation after revaluation. Revalued amount divided by remaining life at the date of revaluation. Now we need to calculate excessive depreciation. So you can see previously per annum depreciation was 10,000. Now per annum depreciation is 12,750. So now what is excessive depreciation? 12,750 minus 10,000 pounds. So this is excessive depreciation. Means 2,750. So what would be the double entry? 2,750 it will be shifted from revaluation surplus to retained earnings. So we have deducted it from revaluation gain and we have shifted it to retained earnings. At the end of the 2013, what is carrying value? 89750. Same goes for the next year, 31st of December 2014. What is the revalued amount? Revalued amount is 102,000 and the remaining life is 8 years. Once again, the depreciation will be 12,750. And once again, there will be excessive depreciation of 2,750. So excessive depreciation will be deducted from revaluation gain and it will be transferred to retained earnings. So these are 2-3 steps for revaluation. So you should remember this step, especially you should remember double entry for the revaluation and you need to remember the excessive depreciation double entry. So if you have revaluation loss, entries will be reversed. That's it. Students, please tell me if you have any question. Idris, Phir Idris, then Ibrahim, Faisal, Nida. Any questions? Idris. Okay, so